risk markets staged another day of strong rally, boosted by solid earnings from Goldman Sachs, Johnson & Johnson and others. The Dow closed up 0.95% at 13,551.78 and looks set to challenge the 2012 high of 13,661.87 soon. Asian equities followed, with the Nikkei up over 100 points and the Hong Kong HSI up over 200 points this morning. In the currency markets, the Aussie did get some lift from risk appetite against the dollar. However, the euro remains the strongest currency, boosted by intensified speculations on a Spanish bailout. Meanwhile, the Canadian dollar is the weakest currency after yesterday's sell-off triggered by the Bank of Canada's Governor Carney. Olli Rehn, the European Union's Economic and Monetary Affairs Commissioner, introduced in an interview a new instrument of the European Stability Mechanism, Enhanced Conditions Credit Line. Rehn stated that the new toolbox is a precautionary credit line facilitating the kind of primary debt market interventions of Spanish government securities that we would have in mind in case there would be a request. Both Michael Mester and Norbert Barthler, senior lawmakers of German Chancellor Angela Merkel's Christian Democratic Party, stated that this would be a possible move. This suggested the biggest Eurozone lender has turned softer towards the conditions of financial assistance to debtor countries. Expectations are somewhat rising ahead of the EU summit in Brussels later this week. It's reported that Spain is going to request a precautionary credit line so as to satisfy requirements for the European Central Bank's OMT bond buying program. And since it's just a credit line and doesn't involve borrowing funds from the ESM, Germany seems to be open to the idea. In addition to that, Moody's affirmed Spain's debt rating with a negative outlook, just one notch above junk level. The Canadian dollar suffered yesterday after the Bank of Canada's Governor Carney warned that synchronous slowdown underway in the global economy could spill over into Canada. And the bank's revised forecast next week will take into account the impact of the uncertainty. They had been somewhat hawkish as it mentioned in its last statement that some modest withdrawal of the present considerable monetary policy stimulus may become appropriate. However, Carney's comments yesterday sounded like the central bank will retreat itself from this tightening bias and turn neutral instead. They will meet next week and the loonie will remain soft ahead of the meeting. Looking ahead, the UK will be the major focus in the European session, with the Bank of England minutes featuring. Also, the UK will release job market data while the Swiss will release the ZEW survey. New residential construction data will be released from the US later in the day.